Wanted to take a look at SPY stock today. We got PPI this morning. Producer Price Index is the producer's inflation report, not what the consumers see. Came in a little hotter than expected, actually went up year over year. So what does that mean for SPY stock? I wanted to break down the economics there and show how I think actually it does nothing. We did see a sell-off initially on SPY stock today, all through the morning, but then it rallied and it basically went break even for the day. So what happens next? Given inflation, we just got inflation numbers earlier in the week, consumer price index coming in a little hotter than expected. Of course, SPY stock and all the other stock market indicators sold off, but then kind of mellowed out by the end of the day. So where do we go from here? It all depends. It depends on the tone for the Federal Reserve. The economy is a lot stronger than we initially thought. We feared there'd be a recession. We're getting a flyby on this. So let's break down what happened with SPY stock today, a few other indicators. I'll break some things down and show you that SPY stock actually has a lot more upside. Let's jump in. So first off, SPY stock is actually an ETF. It's a Spider Select ETF for the S&P 500. You may be following VOO stock, VOO stock, whatever you want to call it. It's an ETF. It's an easy way to play the entire S&P 500. The S&P 500 is fairly broad-based. I have a breakdown of some of the individual stocks I want to show you that there's still a lot of potential upside. Some stocks within the S&P 500, of course, are overpriced. Some are underpriced. It's fairly balanced. Here we're looking at producer price index, headline inflation kind of mellowing out there. Didn't really pop up to higher, but it was the core rate. This is the core rate for US Producer Price Index popping up a little bit. I didn't really see anything in there that really kind of jumped out at me. The consumer is really what is going to be the focus for the Federal Reserve. And this tiny little pop you see higher is only like 1.89%. It wasn't that big of a jump year over year for the core rate. And it's below 2%. I thought that the market movement off of this was a little overblown. But it comes on the heels of what we got earlier, the consumer price index, which was a bit higher. All right, CPI came in at 0.4% month over month, a little more than expected. The market was hoping for closer to 0.3%. But let's just say we would have gotten 0.2%, half that rate. If you take 0.2%, you multiply that by 12 without compounding, you're looking at 2.4% rate of inflation. That is not the 2% target rate that the Federal Reserve wants to see. Maybe they'll give a little bit here and there, like 1.75 to 2.25, as long as the pace of the economy is moving forward in some kind of manner. So 0.4 without compounding, multiply that by 12, that's nearly 5% without compounding. Those month over months are compounded. That's the bigger concern. Producer price index wouldn't really kind of force the Federal Reserve's hand in any one kind of way or the other. This is the headline, the actual number. And as you can see, we were pretty much trend lined up until 2020. Then we had this big jump up. And this, what the Federal Reserve is trying to do here is get things back on trend line and moving higher at a modest pace. We could see these numbers kind of moving sideways for some time. That is the hope of the Federal Reserve. Bring it down below a 2% growth rate and then get the economy fine-tuned to normal. But this is what I'm looking at. This is U.S. CPI core inflation versus personal expenditures. Now, we did get retail sales yesterday. Retail sales came in a little bit softer than expected. And on the heels of a lower December number, they revised it downward. And it's typically 2 or 3 months back that they look at, and they will revise on a regular basis. So we had previously seen 0.6% on retail sales month over month over month. They just revised the last one down 0.4. Now we saw a negative 0.8 drop when they were looking for a negative 0.3 to negative 0.4. Their economists think that that was kind of a seasonal factor with weather. Of course, January is always going to be smaller than December, simply because of the holiday season for December itself. But this chart is really where I kind of stay focused on expenditures. If personal income starts increasing on a year over year growth rate that is higher and higher, inflation follows. It's a lagging indicator. So we are seeing expenditures kind of moving back upward. Retail sales tell us maybe we'll see some moderation here in the next couple, 1 or 2 or 3 months, but nonetheless, the pace of inflation dropping probably won't be enough. So this is we're getting real close to the end of the day, and I did take a look. I didn't update this particular chart. This is a 3-minute bar chart, and you can see that SPY stock here. We're actually looking at the S&P 500 SPY stock. For those who trade the ETF, dropped hard at the 6:30 time, my time, 8:30 New York, when the initial PPI number came out, fell, rallied. It looks like it's kind of going to break even for the day. But the real question is, what happens over a longer period of time? Here's the US 10-year Treasury yield. Now, the 10-year is something that I follow religiously because it's really, right now especially, very important. If this yield kind of starts pushing higher, that could really affect the economy. Now, keep in mind, we were just above 5%, and I pushed this chart back as far as I could so that you can see the peak in late October when the 10-year pushed above 5%. Obviously, it didn't have a whole lot of impact on the economy itself. We're seeing a robust economy with expenditures and employment. Moving forward, I don't expect the US 10-year Treasury yield to change much. And for anybody who does trade SPY stock and wants to know what's going to happen next with SPY stock, this is really kind of the takeaway right here. Until the Federal Reserve changes its tone, the US 10-year Treasury will probably move slightly higher, moderate into a new trend, maybe somewhere between 4.25 and 4.5, until we get more information that would move the US 10-year Treasury either up or down based on economic data in the future. For right now, the Federal Reserve has not changed its tone. They're basically status quo. They could lower interest rates if they needed to. They could raise interest rates if they needed to. We have a robust economy. From what I'm looking at, I don't see any reason whatsoever for the Federal Reserve to lower interest rates because I don't see the current level of interest rates being either accommodative or restrictive. The economy is moving forward. We're seeing employment gains. We'll probably, in 2-3 weeks, we'll see non-farm payrolls come out for February and the first Friday of March, and that could easily be another robust number, which would mean higher personal incomes, higher expenditures, pushing the economy forward, and with the delay in inflation could move higher. My take, I believe the Federal Reserve will have to raise interest rates in a couple months, couple quarters. We'll see. But it might not be we might not see any kind of sell-off until, say, September. And this is something I've been talking about all the way back in last year, towards the end of last year, that this is how I kind of saw the play for inflation. Now, given that, there's still a lot of upside for SPY stock. Now, this is a breakdown, and I have all 500 stocks traded on the S&P 500 in a spreadsheet. But if you look, this is, I do one share. I look at the next 4 quarters, take a look at the current stock price updates midnight every night. And then given the next 4 quarters, that'll give you the earnings per share projected and the future yield. Jacobs Solutions right there in the middle, that's number 250. That's your halfway point. You could say between them and Darden Restaurants. 5.75%, meaning 250 stocks have higher yields than Jacobs. 250 stocks have lower yields than Darden. And so the average here is 5.75, 5.76% yield. The US 10-year Treasury is trading at what, 4.3? So by and large, each individual stock within the S&P 500 or SPY stock is yielding more than the US 10-year Treasury. That doesn't mean those stocks are going to go higher, though. You look at some of these stocks and people have just lost confidence in them. They don't necessarily move up or down, but they may have high yields. Wanted to break everything down. Here's a breakdown. This particular portion of the spreadsheet is the very top. These are, I want to say there's probably about 25 to 35 stocks here. And this is the breakdown. You can see these stocks. If you want, take a quick screenshot. You can kind of blow that up and take a look at them. One stock each. They're forward 4 quarters producing the yield. United Airlines, 22.157%. But does that mean UAL stock would go higher? Not necessarily. And you can see the breakdown that it drops pretty quickly all the way down to 11% for Comerica. Comerica is a fairly solid, stable company within the United States. Does that necessarily mean Comerica's stock is going to go higher? Not really. Here we're looking at the bottom, say 25 stocks. And there's some big names in here. About 6 from the top there, you'll see Tesla. Look at the yield on these, 1.5%, 1.8%, all the way down to negative. Some companies are negative for right now, this quarter, over the next 4 quarters moving forward. So this kind of gives you an idea. 500 stocks, 50% of them are yielding 5.75%. The other 50% are much lower. So there are some value stocks in there. I wouldn't call Tesla stock necessarily a value stock. Breaking things down, this is the Spider ETF. This is SPY stock itself, the chart. We've come a long way in a short period of time. People were wondering, have we seen a top? Given the numbers that I'm looking at on a regular basis, I'd say since the midpoint of the S&P 500, all the stocks that are held within the SPY stock, regardless of the weighting, because I only show 1 share each, the midpoint is higher than the US 10-year Treasury yield. And as long as the Federal Reserve is not going to push into a restrictive mode beyond where they are right now, then the SPY stock would continue higher. But if the Federal Reserve feels like they're being forced to make a move, sure, SPY stock would see some downside. For right now, I bet we trend ever so slightly, more and more, a little bit higher, a little bit higher, and a little bit higher, until we get that one catalyst event where investors finally take a look at things and say the Federal Reserve needs to crimp out inflation. It's not slowing down. The economy is growing. Inflation will probably move a little bit higher, but certainly not hit their 2% target rate at this level. Therefore, the Federal Reserve would need to move interest rates higher, which would be a more restrictive environment, and therefore the U.S. economy would likely moderate out. That's what I'm kind of focusing on, the fact that most of the stocks in the S&P 500, SPY stock itself, are underpriced relative to the US 10-year Treasury. There's going to be a lot of people stepping in, buying on those dips on those bigger names that could see some price appreciation with those higher yields. That's my take for SPY stock. If you find this kind of a content what you're looking for, a breakdown like this, make sure to hit that like and follow button. See you in the next video.